talk about the cement industry and talk about the pricing action or the lack thereof that we've seen in the months gone by. We have Girija Shankar Ray, the lead analyst cement at Institutional Equities Research, joining us of Yes Securities, joining us on the show. Thank you so much for your time, Girija. Also, help us understand what is happening. Pardon me, what is happening in terms of the pricing action when it comes to the cement prices? Because despite expectations of price hike post monsoon, the October November averages have been 6 rupees per bag below the quarter two exit levels. Any attempted increase has also been rolled back. So, do you believe that the worst of the cement price correction is behind us?
Hi, good morning. Thanks for taking me to the channel. See, we did monthly cement channel check. So what we found, October, November, anyway, September was, end of the September, there was a GST rate cut which has impacted the pricing. So, and all the companies actually they have cooperated with the government and successfully that benefit has passed on to your consumers. So that's a very good thing. So post that, if you see in October, there was a price impact because of GST rate cut and the early festive seasons and monsoon impact. So that is the reason in October there was a price impact. In fact, in November till now there was no price hike. I can say all India average price is at similar level of October exit price. Yeah, there's no doubt there was a few pockets they were trying to take a price hike, but it didn't sustain for 2 to 3 days. And by end of the November, what we observed, basically in southern regions and eastern regions, there is a price decline of 5 to 10 rupees per bag. But it was we can say more or less net on net basis the prices are flattish on month-on-month basis. But if you talk about the quarter two exit price with the current 2 months average price, there is a decline of around 5 to 6 rupees per bag. So that is nothing but your GST rate impact and GST rate impact and the seasonal impact.
Okay, so that's on cement pricing. But let's also talk about any price hikes that you're expecting to see. How much, how soon, and which regions could be relieved of the pricing pressure we are seeing right now?
See, the GST rate cut is actually that is the benefit government wants to provide it to the consumers. So I don't think so any kind of meaningful price hike in near term, let's say for 2 to 3 months. If the price hike happens, then again it is going to hurt the sentiment of the consumers. So taking care of sentiment of the consumers, I don't think so. Cement companies are going to take any price hike, any meaningful price hike until unless there is any input cost pressure. When I'm saying input cost pressure, it means your energy cost specifically. So right now, what I see, for next 2 to 3 months, there is no price hike. Again, some people will be expecting in January, February, March, there may be some kind of price hike, but I don't think so. Why? Because again, fourth quarter is a volume-driven quarter, and companies will have year-end volume sales, volume pressure will be there. So obviously, more or less, it's very doubtful that there will be any price hike in January, February, and March.
Right. The other thing I also wanted to talk about was the GST cut on cement. That was expected to aid volumes, but this is not really playing out as per expectations, is it?
See, cement is just like a commodity, and it is not like the GST rate cut has happened. That is the reason more volume will come up. See, second half of the year always is a volume driven. Second half of the any year is a volume driven year. So obviously, there is some kind of subdued in the volume in November, October and November also. And December, we can expect some kind of volume uptick because of year-end volume push. But as you mentioned, as you say, GST rate cut will have a very big impact on the volume that volume demand will be so much. So I don't think so. It is going to work out in that way. But only one thing, what I can say, because of GST rate cut, the shifting of the consumer preference is going to change. Means like, people who are using B or C category of cement, so they will definitely move to the A category of cement with lower price.
And at a time, Girija, when cement prices are correcting, raw material prices too have not been very supportive, with domestic coal prices declining about 2% on a sequential basis. And on the flip side, you have diesel prices that have remained absolutely flat. Now, given this backdrop, how do you see cement sector spreads shaping up in the second half of the year?
See, if I talk about the cost structures, obviously there is a very good sign in the cost structure across the industry. So around OPEX per ton, if I talk about, it is around 3.5% or 4% decline. If I consider first half of the FY26 with the first half of FY25. Diesel prices are stable, and obviously from past 8 months, I can say your petcoke and international petcoke and coal prices are elevated, but domestic petcoke and coal prices have, it has declined, and it is in a milling. I can say it's a very good range, so which can help the overall cost structure to decline. So, and second, most importantly, companies are actually trying to use, they have increased their usage of green energies, and, they have started using a lot of, AFRs, and renewable energy has increased. So these are these are the, things are going to help on the overall reduction in cost structures. So your top line, I can say that is going to impact because of lower realizations. All the volume will be, 7 to 8% of year-on-year growth. But your bottom line is will be good because of the strong cost structure.
Great to have in that insight. Thank you so much for your time today.
Thank you.
Okay, that's a perspective coming